All right, today we are going to dive into an idea that might just flip a switch in your brain about how you see money. It's all about silver, yeah, but not in the way you probably think about it. So let's just jump right in with a phrase you've heard 1,000 times.
Silver closed at $30 an ounce. You see this on the news, you read it in financial reports. It's just the wallpaper of how we talk about markets. It feels totally normal, right? We're measuring silver's price and the ruler we're using is the dollar. But what if we've got that completely backwards?
I mean, really think about that. What if the dollar isn't the stable ruler we think it is? What if it's actually the thing being measured? This one little question, well, it changes everything.
To really get this flip, first we have to be honest about how we normally see things. The language we use, it shapes how we think, and that is absolutely true when it comes to money.
So when we say silver went up, we're automatically treating the US dollar like it's a fixed point in the universe. It's the unmoving yardstick, and everything else is what's changing value against it. But is that really a safe assumption? Especially when you remember that the dollar is a fiat currency.
To really question that assumption, you just have to look back at a piece of American history that, honestly, most of us have forgotten. See, this idea of silver as just another commodity, it's actually a pretty new thing.
That's right. For a huge chunk of this country's history, silver wasn't something you just bought with dollars. In a very real, legal sense, a specific amount of silver was the dollar. It was actual constitutional money.
And you can see that whole story right here. It all starts back in 1792, when the Coinage Act literally defined the dollar as a certain weight of silver. Then later you had silver certificates, paper money that was basically just a claim check for your silver held in a vault. But the big change, the final cut, came in 1968. That's when they stopped letting you trade in those certificates for the metal. And just like that, the dollar's transformation into a pure fiat currency, backed only by faith in the government, was complete.
So, with that history in mind, we can get to the core idea here. We're going to take that everyday view we just talked about, and we're going to turn it completely inside out.
This is the question that matters most. We just automatically assume the dollar is the constant and silver is the variable. But what if we've had it wrong all along? What if an ounce of silver, a physical thing, is the constant, and the dollar is what's actually bouncing all over the place?
Now look, mathematically, these are just two ways of stating the exact same ratio, right? $30 per ounce or 1/30th of an ounce per dollar. But the mental model, the way it trains your brain, is totally different. The view on the left just reinforces the idea that the dollar is king, but the view on the right? Well, it suggests the dollar is what's constantly changing, measured against the steady physical reality of an ounce of silver.
So this is the metaphor to hold in your head. An ounce of silver is like a physical ruler. A foot is always a foot. It doesn't stretch or shrink. An ounce is always an ounce. What changes is how many dollars, or how many loaves of bread, or how many hours of your work you have to line up next to that ruler to equal its length.
Okay, so once you really start to adopt this perspective, you begin to see the entire financial world through a new lens. And a lot of those common financial terms, they start to mean something very, very different.
We've all heard this a million times, right? It's probably the #1 criticism of silver. Its price in dollars swings around like crazy, so it seems unstable, risky, and unpredictable.
But with our new lens on, what if it's not the silver that's volatile? What if what we're actually seeing is the market's confidence in the dollar and the whole system built on it? What if that's what is volatile? From this angle, those price swings aren't measuring silver's instability, they're measuring the dollar's.
Here's another cool shift in thinking. You know how analysts love to split silver's demand into neat little boxes. You've got industrial demand for solar panels and electronics, and then monetary demand for coins and bars. But if you see silver as money, then using it in a solar panel is just another form of demand for the monetary good. It's all part of the same picture.
And this even changes how we can think about something as fundamental as inflation. We're taught inflation is just rising dollar prices. But what happens if you measure the price of a gallon of gas, or a house, or a basket of groceries in ounces of silver over time? You might just find that a lot of what we call inflation is really just the dollar losing its value against real stuff. So what's the big takeaway here? Let's get really clear about what this thesis is claiming, and just as important, what it's not claiming. So what this says is that an ounce is a constant physical unit, and that silver still has a monetary role to play. What it does not say is that silver's purchasing power is magically frozen forever. Of course not. The world changes, technology changes, and what an ounce of silver can buy will change with it.
The point isn't that its value is static, it's that the unit of measure itself is constant.
And so we end by flipping that very first familiar question completely on its head. Instead of asking what silver's worth in dollars, this way of thinking encourages us to ask a very different question. What is the dollar worth today, measured in silver? It seems like a tiny shift in words, but it opens up a whole new way of understanding what money really is.